And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Monday, March the 14th. I'm John Hoagland. Thanks for trusting me with your time. If you are here, you have made the change in the time zones. Thank goodness that you are here. And if you're in the markets already, hopefully you've got things heading your way. As far as economic numbers this morning, nothing due out today. And as always, we're going to be seeking accurate context, good risk management, patience, and flexibility in our trading today. So with no major releases due out today, take a look at what we've got for the rest of the week. We know we've got the FOMC meeting, which is a 2-day meeting, culminating with the FOMC release at 1 p.m. on Wednesday. But tomorrow, we have the PPI final demand at 7:30, also the Empire State Manufacturing Index. Wednesday morning, before the FOMC meeting, we have retail sales at 7:30 Central, import-export prices at 7:30 Central, business inventories at 9, housing market index at 9 also Central, and the EIA petroleum status report at 9:30, all Wednesday, and then, of course, the FOMC announcement. And then the Fed chair press conference. We won't be hearing from any of our talking Feds until after the FOMC release. Thursday, housing starts, jobless claims, all at, and Philly Fed, all at 7:30 Central, industrial production at 8:15, again on Thursday, EIA petroleum status report at 9:30, and then existing home sales and misleading indicators on Friday. So we do have a lot of important information coming out this week, however, none of it today. Again, thank goodness you changed your clocks. I forgot to mention that last week. I apologize. And what else? Oh, still, markets are going to be very hair triggered and on headline risks. Headline risks remain high out there. What traders are thinking about this morning, just speaking about some of the news, peace talks between Russia and Ukraine continue as the U.S. tries to head off Chinese undermining of the Western sanctions. Chinese stocks crashed yesterday, today, after 2 manufacturing provinces closed down due to COVID lockdowns. Crude prices lower this morning as that news and that daily shifts in daily supply and demand balance. Seems like some pretty volatile moves continuing to go in crude oil. Interesting situation. I think we're going to enjoy looking at the market at crude this morning because we got a pretty big potential change in direction. Technically. We're getting no help from India, who has agreed to buy Russian oil at a deep discount. U.S. equities were mostly higher. NASDAQ, I think, is trading lower now, as maybe hopes from those peace talks. But remember, just keep praying. As usual, make sure you hit the lucky like button, share, comment, question, feedback, and love and heckling are all welcome here at Top Step at the forecast. The VIX this morning up a little bit here at 31.33. Can you see these markets coming off a little bit? Even the S&P still slightly higher on the day. Dollar index off its 52-week high, 98.85, and the yield on the 10-year, nice little pop in that, up over 2 at 2.07%. Got to say good morning to everyone. Jeff Mullins, the first one in the room. Jeff, you win the prize today. Scott saw and he conquered. Shaw, good morning. Manuel Caesar, Brian, Vince, JD, John Doherty. You guys are going to get a treat next week. John Doherty is going to be doing the forecast and the recap. John is a extremely smart, intelligent, and one of the sweetest big dancing bears that I know. Chilling with Dylan, team Shifton, Laura, good morning. Aaron, Three Lions Insight, Shifton, Luis, I lost my spot. Bill, Charles, Brody, Francino, good morning. Marcelo, Terry King, Jay, good afternoon from London. Francino is in London. Shifton, good morning. Jerry is awake. Hopefully I am too. It's going to be a long day today. My dog was up most of the night, so I did not get a lot of sleep. So I'm going to be very cautious about some of the decision making I'm going to be making today. Expediter Dean Devant, good morning. Cheryl James, good morning to you, Shifton. Alfred, Mr. Presto, Francino, peace in our time. My goodness, wouldn't that be amazing? We think we'd be able to be there now, but I guess not. Harry, good morning. Federico, Dan, good morning. Yes, trading the June contracts today in the equities, 100% for sure. Trading research, Rusty Golfer, Murik, Andre, Force Driven, top of the morning to you as well. Jay Crockett, Chris, good morning. I haven't seen you in a while. I think, I don't know, I think we've had some conversations before, I think. Chris, it's good to see you. Everyone on the March contracts. June contracts, I mean. Time to get the readers on. Yeah, right. I know. I need those readers. Check your platforms. Absolutely. Thank you for reminding everybody of that, Dan. Jack and Adrian, good morning. Today, Monday, group coaching. Here's the link to register. And I'm going to put the link for Thursday's Make Hogue Money. That's on there too, so you can register for that. And Monday and Wednesday's group coaching and Thursday's Make Hogue Money. Make Hogue Money is we're going to meet after the market forecast. We're going to take a look at the S&Ps and we're going to agree on somebody's idea of a potential trade. Now, last Thursday, we did not see a potential trade, and that's okay. It's all right not to trade. We're still up in the account. We're trading it on Sim to begin with, but if we succeed in this, we'll go live. And it's a really, I think, a fun and interactive and a cool way to share the opportunities in these markets with some other traders. All right, on that note, let's go ahead and take a look. I need my readers. You're not kidding. All right, let's go ahead and take a look at these charts. If in March, I would switch to June. No, it's okay, Shifton. It's okay. Rollover was Thursday. Friday, we still had kind of a little bit more volume in the March contract at the beginning, but today there's much more volume in the June contract, the M June contract. All right, let's go ahead and take a look. Okay, so here, hey, good morning, Rick. Good to see you as always. It was good to see you Saturday. Okay, even the S&Ps, potential positives overseas. we still have downside structure. We know the FOMC meeting is coming. There's going to be a lot of hedging and posturing before Wednesday's release. They're looking at a 25 basis point increase in rates. We'll have to wait and see how that goes out, how that comes out. But a lot of folks will be hedging. The trend lower is intact, so showing some signs of balance here. And so far today, we are inside Friday's extended trading hour range. We did add 73,000 in open interest on Friday, but a lot of that is due to the movement of contracts due to rollover. So I'm not looking at Friday as a big increase overall in open interest. I think it was more of a situation where we were seeing some influence on open interest due to rollover. All right, so let's take a look at the 30-minute chart and see if there's anything that we can see. And we do know that we had a late spike on Friday. A late spike is when right at the end of the day, the market extends the range and does not have time to accept those lower or higher prices. In this case, it's a spike to the downside. Settlement 41.92.50. All of our overnight inventory is to the long sides. We've had a little bit of an adjustment back down towards settlement. I would say we're a lot closer to even as far as overnight inventory is concerned than having anything major. All right. So inside extended trading hour range, inside the regular trading hour range from Friday, knowing what we've got coming out this week, not looking for any huge moves. Not looking for any huge moves so far. But we do have this late spike. Now, there's two bases to this late spike. Let's go into the profiles and take a look. If you're not familiar with market profile, I suggest getting the book Mind Over Markets and learning a little bit about it. Okay. So I'm going to close this down a little bit. Get to the right day, and here it is. So in L period, this green line right here is when we really started to extend the range. So I'm looking at the base of L period here, which is 42.19 as really the base of the late spike. We just barely overlapped with a couple of TPOs in M period, and we continue to move lower. If you're looking at the M period as the base of the late spike, 42.13 is your number. We are going to be dancing in this area by the time we open in about a half an hour. It looks like there's some real digestion and some potential looks in this area for potential opportunity. Friday's, I should say, value area low is all the way up here in TPO, but value low in volume is right in this area. So a lot of it's going to be as if we can reject Friday's value area, we may look to this market to go lower. If we can accept inside and above the late spike, we may look at this market to continue to move a little bit higher. Here's that 30-minute chart again. You can see the late spike right here. It's a little easier on the profiles. But overnight inventory, we don't really have any. Knowing what we have coming, are we looking for big moves or are we not looking for big moves? I'm thinking we're still in rollover. We're in the June contract. We just moved into the June contract. There's still a lot of rollover to go. Our longer time frame is going to be more interested in getting a cheap rollover or legging that spread than they are going to be looking for directional opportunities. I'm going to be looking at this as long as we remain inside Friday's range as short time frame control. Let's take a look at the crude oil now. We've got the opening range has just finished. All right. So we've got a potential head and shoulders here. We've got a shoulder, we've got a head, we've got a shoulder. We're basically trading right at weekly kickoff low, which is 104.30. We're a little bit above it. But if we do accept on below that weekly kickoff low, that may be enough for us to have broken our neckline in this head and shoulders. And the measured move from that takes us all the way down to 75, 76, $75, $77.50, I think is the area that I was really looking at. So if we can't hold this weekly kickoff low, but technically there is a possible move back down to these levels, which would be great, right? I mean, I know I'd be much rather be paying less at the pump. What are the odds? We are in rollover, so that's going to be one thing that may keep us from becoming directional. We're going to be moving to the May contract on Thursday. It all becomes, I think, a question of are we going to accept or reject below weekly kickoff low. Here's the 30-minute chart. Let's see what we see here. So settlement is 109.33 all the way up here. And we are just dancing and playing around with this weekly kickoff level. This is pivotal. We've got a gap open, gap rules. We've got overnight inventory to the short side, and we've got weekly kickoff low in play here. What is the 1 minute chart looking like for our opening range trade? So far, the opening range trade is showing us shorts. It's trading right to that weekly kickoff level. If we can't take that out, or we take out the opening range, that may mean there's opportunity then to the upside. But we're very, very important here at this 104.30 level right here on this open with the weekly kickoff and opening range. This looks like I'm relatively positive there's fish in this area. Which direction of the boat to cast off of, still in question. 30-minute, we go back and take a look. Okay, we've got our opening range, the high of the session so far. If we accept below weekly kickoff low, I'll look for the market to continue to move in that direction. Take a look at the NASDAQ now. Always very similar to the S&Ps, but just a little bit different. It's the weakest of the indices. The market really testing down to weekly kickoff low in the overnight in the pre-open here. We added 17,000 in open interest, and this still says March. What's going on with that? This is June. Everything else is June. For some reason, that's not doing it. So very similar. Weekly kickoff in play, struggling to hold above settlement. Some of the reason that we've come down and we've been testing these weekly kickoff levels is there was a statement coming from the Kremlin about 7:30 this morning that I think knocked our NASDAQ off a little bit. Downside structure is intact in longer time frame. Here's the 30-minute chart. So we had perhaps some overnight long inventory here. That overnight long inventory has now been reconciled. This move off this high up here was when a whole bunch of things that the Kremlin were talking about came out. So it kind of took care of any overnight inventory. If we're going to open with a gap, we're going to open with the weekly kickoff low here. A lot of these markets playing with these weekly kickoff early levels early in the week this week. That's okay. They're not meant to determine a extremes of the week or anything. These are levels that I'm looking at longer time frame traders to want to adjust inventory, but we're up against a whole bunch of rollovers this week, so it's going to be difficult to get our longer time frame traders to become directional. They will, but When? So overnight longs reconciled. Weekly kickoff low of 13,257 going to be pivotal. If we can open with a gap, open below that level, it might be an opportunity from the opening range. Although the opening range trades have been extremely cantankerous lately. Cantankerous. That's another industry term. Gold. All right. Well, we've got 1, 2, 3, 4, 5, now 6 points of contact with this trend line. This trend line is I think, very important for the continuation of the upside structure that has been holding and has been suffering lately. Friday, we added 16,000 in open interest on an overlapping to lower range. Money coming in the opposite direction now. Don't forget, we have an island top up here. We're going to see that in the 30-minute chart here. And look at the volume. Volume has really been drying up here. Now, this contract is going to roll on the 28th of March. It's going right past the May contract to the June. Going right to the June contract. No May contract. Back on to June. But again, we've got a couple of weeks, and we are just kind of coming into this rollover. So all these rollovers are going to be affecting the markets. Let's take a look at the 30. Overnight short inventory. Really just a little bit of a pushback to it. I'd say that we still have some short overnight traders. If they don't find what they're looking for, they're going to bail at some point. Now let's take a look at what we have as far as our island top. So we know an island top is when we are directional to one side. In this case, it's to the upside. We have a range that there's a gap up to a range, and then a gap away from the range that is never filled. We have not yet filled this gap. So this island top might be telling us that this market is technically ready for a little bit of a deeper pullback. And we also have a head and shoulders. So if we're going to be looking at the head and shoulders, where is the neckline? Perhaps about right here. We're below that neckline. So if we're going to measure a move, we've got some space down below and a whole lot of visuals, naked points of control to go down and recheck. A lot of it is going to depend on how traders react at weekly kickoff low, which is down here at 1931. We're in range. We're in value. I don't feel that I need to be pressed into doing something very early here in gold. All right. Now to the euro and the 10-year and the natural gas. Euro seems to be finding some balance. We've put in a low here, the weekly kickoff. We've got last week's low. We've got last week's high. We're pretty centrally located in that. This market seems to be looking for new information. And I'm starting to think, we're going to head back into some short time frame control. We're past rollover. We're past expiration. Open interest, we added 35,000 in open interest. Well, I don't know if we're necessarily past rollover. We haven't expired yet. And there's still some significant open interest in the March contract. So we're just kind of hanging here. I think we're kind of going, like I said, heading back into short time frame control. A lot of these markets waiting for Wednesday. I think that's a Lisa Loeb song, if I remember, Waiting for Wednesday. And that's what we're all doing, I think. I mean, I'm going to be really reasonable with any profit targets unless some sort of headline risk changes things. Take a look at the 30. So settlements down here. We have some overnight longs, a little bit of reconciling before the open. We're in range. We're in value. We've got a naked point of control up here. We've got a naked point of control down here. Either one of them would be viable visual targets, and we're right between them. So I really just don't want to do anything. I'm going to back burner this product again today. Uh, 10-year. A little boost in yields. Of course, we know what's coming. Lost 18,000 in open interest on Friday. I believe weekly kickoff levels, I think they remain the same. So now we're looking at a situation where we may actually be able to see some continuation of the downside upon acceptance below this level. We know rates are going to be going higher. Why wouldn't prices go lower? Weekly kickoff low is in play, but maybe behind us now. Take a look at the 30. Here's the 10-year. Lots of overnight shorts. No real attempt to go close the gap or come back to settlement without closing the gap. What are we looking for? We're looking for opportunities to go with the gap, which has us looking for shorts. I don't want to sell shorts on lows. I want to sell shorts when the market is exhibiting some sort of strength. I just saw Sarah Hall's here. Good morning. Happy dawn to you. You got to see the dawn again an hour later here. So what are we doing here? We're going to be monitoring to see if we can find some sort of good price level to look for opportunities to sell. We have to be careful again because we have overnight inventory to the short side. I'm going to probably be patient, wait and see if I get an opportunity near weekly kickoff low. Net gas. Imbalance. Overnight open interest. No change in open interest. Not even 100. Not even 100 contract change. Moot. Short time frame control, I would say. We're not near any extremes. We're not near any weekly kickoff levels. Short time frame levels are really all we're going to be able to lean on here. Here's the 30-minute. Boy, did we get short last night? Huh? Nice reconcile, but we still are open with a gap. If we can't close this gap, and this is a subjective term, the gap rules are, if we can't close the gap relatively early, we look to trade in the direction of the gap, which would have us looking for shorts. It's never going to be easy. I wish it was. I wish I could tell you, well, this is where you want to sell it and this is where you want to buy it and have it actually work that way. But that's not the way these markets work. That's not the way it is. We all have the same things that we're dealing with in the fact that nobody knows any outcomes. Nobody knows. Mr. Presto, good morning. Denny, Diane, good morning. Sarah again, good morning. Mike, good to see everybody. Okay, it's Monday. Looking forward to seeing everybody for the group coaching today. Be back at 3 o'clock after that for the market recap. We'll see how these markets have played out for the first day of this chapter in our year of the trading book. Mondays are usually not my best days. I know this. I'm usually going to be very patient, and I'm going to have to wait until the market shows me something. I'm not a big fan of going looking for trades. When a trade comes to me, I'm going to see if I can feel it, if I can see it, and I'll wait for that opportunity. But until then, I'm going to stay patient here this morning. Yes, this week should have a few surprises. Absolutely. So, got a long week ahead of us. Let's keep the powder dry and find opportunities as they come our way. Let's take our deep breath. I don't know how many of you guys actually do that, but I hope you do. It always feels good to have a nice cleansing breath. Make sure you stay humble, grateful, and creative in your trading today. See you for group coaching and see you for the recap at 3 o'clock. Get out there and profit. Be running down to the proverbial trading pit here in a couple of minutes. I'll see you there. Trade well.